So good to see a lot of familiar faces. Hi, Chris. Looks like you're already in the Christmas in the Christmas spirit this early. Great to see all of you. Welcome to our session today on building and sustaining investor relationships. Before we begin, if we can please ask everybody to please rename yourselves. Hi, Ian. Hi, Pradnya. Nice to see you.
Hey, Rod.
Hi, good
Monza.
Long time no
afternoon.
see.
Hi, hi. Yeah, I know. So if we can rename ourselves, just like Pradnya and Ian and Nicola and Bijon with their organizations on the right of their name, that'll just help us know who's in the room with us today. We can take a minute to do that while we wait for the others to come in. Right. While we wait for the others, if anybody wants to say hello in the chat, introduce themselves, where they're coming from, that would be also really great. Thank you for those who've already renamed themselves. All right. Okay. Awesome. So just to start us off for this one, quick context on why we want to have this session. So it's been building up like a series for Pollinate, right? We started with a conversation that happened in Nairobi at the start of this year around incubator investor relations, and we called it the elephant in the room, where we feel like there was some kind of untalked about tensions between investors and incubators, and we wanted to understand more where those tensions come from, and then how do we collaboratively solve these challenges together. And so after we did that first session, we had an online validation session a few months ago where we asked the community again on their insights from what we've gathered, and then how can we more improve whatever we've learned from the session. And so today it's all about learning together about bright spots, right? Some organizations have very good relationships with investors, and they've developed this through certain processes, tools, resources, and we're very glad to have three kind of experiences and very diverse yet very connected experiences on building and sustaining those relationships today. So hopefully we learn something new, and then if you have any tools and resources, that will also be great to share, right, for everyone in the room so that we can collaboratively work on improving relationships with investors and other stakeholders. All right, so maybe we can start with a quick introduction for those who might be new to Pollinate and would want to learn more about who we are and what we do. So, Aditi, if you can please bring up the slides. Awesome. I see some people are introducing themselves. Okay, awesome. So if you're not yet a member of Pollinate Impact, consider this your official sign. We are a buzzing member-led network of impact incubators, accelerators, and ESOs across the global south, sharing tools, funding leads, and real talk with each other and with other stakeholders. So as a member, you get funding opportunities delivered straight to your inbox, proposal support through our office hours with our partner Assist Asia, organizational coaching through our growth guidance programs, a shared library of tools and resources you can actually use, exclusive members only events from relaxed happy hours to real talk funder dialogues, practical roundtables, and others, and most importantly, connections to peers who just get it. If you're already a part of our growing community, we've also got something for you. Um, if you refer a fellow Impact Enabler, Incubator, Accelerator, you get 10% off on your next annual membership fee. All you have to do is share the link or scan the QR code on the screen so we can keep growing this garden one good referral at a time. All right. Next, just for upcoming events, here's a quick look at what's coming up in the Pollinate calendar. Whether you're already a member or just getting to know us, there is something for you. The next few sessions are members only, the virtual ones. And so if you're a member, we hope to see you there. If you're not yet a member, this is a great time to join or let us know you're interested because we'd love to have you in the mix. So on July 24th, we have our climate incubation state of play. We are talking about innovations in circular economy to start us off for our climate series, where we'll learn more about how incubators and accelerators are helping entrepreneurs within the circular economy space. So if you want to learn more about how to create programs for entrepreneurs in circular economy, this is a good session to come to. And then on July 29th, we have our Pollinate Pulse virtual happy hour for members. No panels, no pressure, just good people, great conversations in your drink of choice because it's 5 p.m. somewhere in the world. So please join us for our happy hours. So aside from all of these members only events and virtual gatherings, we do have our 2025 regional Pollinate potlucks that are coming up. We just did our Sub-Saharan African potluck in Nairobi, where a lot of people in this room actually were a part of last week. And now we're gearing up for Southeast Asia potluck in Bangkok, Thailand from August 13 to 14. So um, most of you will have gotten sign up links for these in your inbox already or in the WhatsApp group if you're a member. If you're not in either yet, don't worry. We'll send you an email after this session so that you can also join these events. All right, awesome. Thanks so much, Aditi. So now that we've introduced ourselves, we'd like to get to know who's in the room. I know we've introduced ourselves a little bit in the chat, but we do have a mural board with us today, which we will get to know as we go along. But let me just share the link to everyone. One moment. Awesome. There. So I will meet you here at our mural link. If you're not in your computer, no worries. We also made sure that you can also join us through the chat if ever that might be easier. So I see some people already coming. So what we'll do first of all is try to map out where we are in the world. I know not all of us are very good at geography, so let's just estimate where we are in the world. You can get a post-it here in the front. You can double click it so that you can get post-it, and then you can put it on which part of the world you are. You can put your name and your organization. If mural is not working for you today, you can also put it on the chat. No worries. So we'll spend a little bit of time to see. I see some people in the Philippines. Hello. Anya, hello. Nicola already here. From Kenya. Um, we're doing this. Let me read some of the comments. So I saw Ian from Cambodia, Australia. Bijon introduced himself also. Jonathan here. Nice to see you. I saw Nikki as well. Welcome. Mowgli is here from Hyderabad. Great to see you. Norhana as well. I see Tess has also put herself. John is there. Ian is there as well. Great. Okay. So while all of you are going through the maps, I'll just show you the next part of our check-in here at the bottom. So after you filled in which country you are from, what's the first word or phrase that comes to mind when you think about investor relationships in your organization? So this could be anonymous. You don't have to put your name, but if you want to, that's fine as well. Um, so yeah, I see desperation here. I see relationship based, partnership, complicated, value add for entrepreneurs, money, tricky, complicated, great. Growth, Samantha said on the chat. Again, for those who just joined us, if you can also please rename yourselves with your organization on the right so that we know who is in the room with us. Please and thank you. Okay, great. We can kind of stick with this for now, but if you'd like to still answer the question, you're free to come join us on the mural. Let me reshare it for those who just joined on the call, just so that you have the link. Opportunity, Margaret says. So it seems like it's a mixed bag, right? There's a lot of optimistic ways of looking at it with the relationship building and opportunities, partnerships, but there's also a little bit of tension and negativity, being tricky, desperation also mentioned. So hopefully at the end of our session today, hopefully it'll be more hopeful, and there might be some tips that you'll get from our speakers for today. Awesome. Thank you so much for joining in the mural. Please feel free to still keep filling it up if you're there. No worries at all. But maybe while we're doing that, I'd love for our speakers to introduce themselves today. We do have three. One of us will be joining us through a recorded video since Paul Belknap's time zone is in the US. And so it's not working for this particular timing, but we do have Bijon and Nicola here with us today. So I'll give Nicola and Bijon the floor to introduce themselves. So please introduce your name, where you're coming from, your organization, and maybe what a little bit about your organization. And then our fun question for today is what's what's something that you invest in that has given you return, something personal that you've invested in. So non-work thing that you've invested in. So maybe I'll start with Nicola and then we'll have John and Nicola.
Cool. Thanks, Rod. Hi, everybody. My name is Nicola Greene, and I'm the director of Opero Services in Kenya. We're a WASH-specific ESO, and we're going to share our experience of building an investor community around WASH. Something that I invest in that gives me returns, I think, is probably mountain biking. So I'm a super keen mountain biker, and yeah, the key return I get is that I know pockets of Kenya that even Kenyans don't know. So someone can tell me they're a small village, and I'll have had chai there someday while rolling through on a mountain bike. Yeah.
That's so cool. I don't know how to bike yet, Nicola, but once I do learn, I will ping you up and then we'll do some biking in Nairobi when I come back. All right, thank you. Bijon, please go ahead.
Hi, everyone. This is Bijon. I started my career at an investment bank, and I came back to Bangladesh and launched a consulting company called LightCastle Partners. One of the services that we give is ecosystem support to different organizations like corporates, development partners, and we have run close to 35 plus accelerator programs in the last 10 years. Over the last 3-4 years, we understood accelerator program in general is very difficult to scale, very people intensive. So we have moved on to training other accelerators and incubators, and we also manage a fund. Till that, we have helped deploy close to $150 million in Southeast Asia. For fun, I think I divide my life into work a lot, and then, of course, close with family. But for enjoyment, I like to read a lot of books, and I watch a lot of anime, which is unusual. But then I have a huge friend group of very, very young people. I'm the oldest one there. But it's good to also hang out with like Gen Zs and everything and watch animes together. Yeah, look forward to knowing all of you and hopefully share some of the experience that I had. Thank you.
That's awesome. Bijon, do you have a quick fave recommendation for anime? Like
I
an
mean, a lot,
favorite
but I mean, my all-time favorite is a very long-standing anime that has 1,000 plus episodes. It's called One Piece. I've
One
been
Piece?
watching that
Yeah.
since I was a kid. I don't know if I'm gonna live long enough for that anime season to finish, but I still, I mean, since I've been watching for a long time, I mean, that has been a long-time favorite. Yeah.
Right. Awesome. Thank you. Well, it looks like you found a friend in the chat. Ian is also an anime fan. And Ian, you found your group. So maybe after this, you and Bijon can talk about anime. Awesome. Well, thanks Bijon. Thanks Nicola for introducing yourselves. We'll go straight into the insights and tips that we'll get from our speakers today in terms of building and sustaining investor relationships. And we will start with Nicola to begin. So Nicola, please go ahead.
Cool, thank you. So I'm just gonna pull up a couple of slides to share. Great. Rod, could you confirm if when I scroll there that you can see those changing?
It's still in the main screen of PowerPoint. It's not the full screen right now.
Okay. Maybe I'll have to stay small then. Let me share one more time. So I'm now sharing
Sorry, no worries.
full screen. Has it come up on full?
No. Can you try stopping share and then try sharing it again? Maybe.
Cool. And we can tell the others we were professional. We checked this in advance.
Yes, we did. But you know, it always happens. No worries. Technical things always come up. Okay, great. Now we're good.
You got them moving?
Yes.
Great.
Good.
Cool. All right. So yeah, hi again, everybody. My name is Nicola Greene, and I'm going to speak a little bit about creating a WASH investment community. I think the case studies, the three that we're going to run through today from all the different speakers are really quite different. So yeah, I will present to you from our perspective as a reasonably small and very thematically focused organization. So yeah, we started in 2019. We are based in Kenya. We have offices in Nairobi and Kisumu, and we have a team of about 15 people. We have three main pillars of work. So we work on scaling WASH innovation, scaling WASH enterprise, and we also do market research related to these two other pillars. So I'll talk to you today about a very specific component of scaling WASH enterprises in East Africa. And that is our WASH accelerator investor model. So I think what would be kind of unique about us is that, of course, we have goals for WASH specific enterprise growth. That's why we exist. Those are the KPIs we have, and ultimately the the impact we're trying to create is very specific to WASH. So kind of when Opero started, we had that identity from the start, and that was very much our mission and vision. We are lucky that there also is an existence of a WASH funders group. So that's a group of WASH funders who act much more broadly. I think there's about 20 or 30 members, a lot of them supporting philanthropic activities. But within this WASH funders group, there are several family foundations, especially, and many of them exist exclusively to invest into private sector-led WASH solutions. And an issue that they had, of course, was that they lacked pipeline. They weren't working together very much. It was all very discreet and random little investments all over the world. So yeah, that was kind of our starting point. We started in 2019 knowing we wanted to do something in this area, and we were aware of this kind of fragmented subset of the WASH funders group who were investing into private sector led WASH solutions. And our kind of key partner in this work, who I also want to mention because they've done a lot of the convening here, is SEWAS. So SEWAS is the Center for Entrepreneurship in Water and Sanitation. And they also do work very aligned with Opero's work, but at a global scale. So yeah, SEWAS are a key partner here. So kind of what ended up happening from this starting point of us wanting to scale WASH enterprises and funders who wanted to invest is that we ended up kind of creating an accelerator program that we wanted to run. And this was back in about 2020. So yeah, we looked at our problem of having businesses we wanted to work with and our investors' problem of needing pipeline and wanting to spend money. And we developed an accelerator program, and we actually gathered together the investors that we thought had these pipeline issues and that we knew wanted to work more and more in this sector. And we pitched them the concept of running at this time, it was a Kenya specific WASH accelerator program. And we just costed what we thought it would be. We, developed the outcomes we thought it would create. And we brought it to the investors. And specifically tailored it to address their pipeline concerns. And I think that was a big lesson. I have it kind of in capitals here is what we were bringing to them and to this specific group of investors was solving their problem. By working together, we were actively going to make their job easier to do. And we really leaned into that with the conversations with the investors. So I don't know for you guys in the different thematic areas that you work in, but investors are of course under pressure to invest, and they want good returns, whether those returns are in WASH outcomes or in finance. So it's our job as ESOs to help them fill that pipeline and help them do well in their work too. So that was kind of how the conversations would start is, we want to do this. These are the outcomes you want. What can we co-create that will fill both of our needs? So the outcome of that was a first accelerator program that we ran for WASH in Kenya in 2020. So how it worked is for this first pilot accelerator program, and actually calling it a pilot worked well because it also took some pressure off. But multiple investors pitched in. So we would invite them all to the same calls. We would present the program, present the budget, and invite different investors to consider how much money they wanted to put into helping us to run this accelerator program based on, the kind of outcomes that they wanted from it. So yeah, in the end, multiple investors pitched in and they did all de-risk each other for this initial pilot program. The pilot ran very well. So since then, we've now run 4 more accelerator programs over the past 5 years. And each investor pays according to, their money availability in that financial year or their specific interest in the enterprises that graduate. So you'll see on the right here, I mentioned that we've done an East Africa Rural Water Accelerator, and we've also done a East Africa Sanitation Accelerator. And the funders and their amount that they contribute kind of lines up with their investment, their investment opportunity and interest in those specific cohorts. So maybe for the rural water, we're talking about a group of kind of 5 or 6 different investors here. So for the rural water accelerator, maybe some of them would be, identify that they're much more interested in that theme, so they pitch in more. For the sanitation accelerator, maybe somebody else. So they kind of, shift in terms of how much they contribute year on year and theme on theme. I think what I've learned from that process is that, definitely the investors themselves, I think, would not have mobilized to create this community. So I think for us, we very much acted as this convener, bringing them together and offering a potential solution that solved everybody's problems. So I think, that's the kind of critical lesson that I'm selling here is around the ESO as a potential convener of investors. The investors have gone on to work together so much more on other things as well, but it was definitely helpful that SEWAS and us were the ones driving the conversation and bringing them together. I would say, it's not perfect. This is a very specific and good success story for accelerator initiatives where investment is the key outcome that everybody wants. So, it's very easy to design these initiatives, pick ideal businesses, and, get the investment in place. And we have a very high investment success rate because of this work directly with the investors from the start. So, yeah, more than 50% of the accelerator participants end up getting investment. It also helps in terms of having post-program support for sustained investor relationships. We have few investors, we have few businesses, and they really end up working together for multiple years. So it is a nice long-term engagement that we managed to create. It works in our case where we offer in-depth support to fewer enterprises. So we're not under massive pressure from these investors to work with 100, 200 enterprises for bulk trainings. No, we're very much tailoring investor needs and enterprise wants. So the total number of enterprises we've worked with across these years is less than 40. And I would say it also works very well where you have asks from the enterprises of over $50,000. I know where some of you work, that's such small money. But in WASH, many of the enterprises we work in need even less than that. So our kind of classic ask from our enterprises is over 100K, preferably. The weaknesses of the system is that it makes it almost impossible for us to work with early stage enterprises or SMEs. A lot because of this investment ask problem, and maybe that they're not generating impact immediately, which is what a lot of our investors want. And that's why the accelerator works quite well. So we've not managed to create a similar system for an incubator model yet. It's not ideal for sustaining our overheads. So, and linked to this next point about a lack of multi-year security. So we do very much exist program to program to program. But we don't have a backbone funding source. We just run accelerators in these little kind of distinct 18-month initiatives. And another kind of critical weakness is investor overwhelm. So actually, we had our couple of investors and this worked so well that the investors were actually just getting almost too many enterprise matches. And they were small family foundations. And yeah, you just may hit a wall in terms of what your investors are able to cope with too. The kind of solution that has emerged to that last problem, so this kind of issue we were having around investor overwhelm, is that SEWAS worked with a lot of the investors to now create the MAGI fund. So what we've ended up saying is, since this system seems to work quite well, since we have good collaboration, the enterprises are strong and the investors are working together, how about we streamline this whole process? So what's ended up happening is the creation of the MAGI fund. This is a pilot fund that's just existed for the last 6 or 8 months. And what happened was just that many of the investors pitched in money and put it in a central fund. That fund has grants and concessional loans available. And now, what's good is that we have a united application and approval process. So anybody that applies, no matter what funder they're kind of targeting, has a united application and approval process. And then, what will happen is it'll go in large batches, all these applications, and we'll review them at a board meeting. And specific investors then can, see which enterprises they're most interested in backing, but in this kind of coordinated approach. So yeah, this kind of MAGI fund has emerged as a result of this investor overwhelm problem that we were having from doing all these tailored accelerator programs. So yeah, closing with 2 tips. I think the first thing we've learned is kind of to dream together and to see the investors also as clients and make sure that you're solving their problem. So part of that is identifying investors who lack pipeline, looking at their KPIs, seeing if they align with you, interviewing them and getting to know them, treating them also as customers, tailor building programs together that enables them to succeed at work and you to do what you want to achieve. And even if they can't fund, so maybe your investors that you work with just don't function like that, perhaps they can sign some sort of agreement with you where they agree to guarantee that they will invest in your enterprise's post-program. And then if you could get some sort of guarantee, you could write a proposal together and bring it to somebody else who does fund the type of initiatives that you want to run. So my suggestion on a quick action would be to think about the work that you're doing, and if there's any investor or funder whose problem that you are solving. Of course, I'm sure we all have investor profiles, but yeah, reaching out and making very targeted efforts to dream together so that everybody wins. And of course, my tip would be that smaller family foundations, for organizations of our side at least, are more loyal and tend to make quicker decisions. So you tend to be able to roll, pilot, and experiment together a bit more. And then, yeah, my second tip would be around this investment community. In WASH, we're lucky in a way in that it's so small, but I guess there's a bit of a community already. But perhaps in your area of work, you could also look at this role of the ESO of being a convener of investors. And of course, maybe not working with all, but maybe working with the more nimble ones and really making an effort to bring them together, either for specific programs or just to invest in your pipeline. I would say our investors actually really appreciate our role in convening and being invited to calls together to getting to know each other. I think it's really worked both for what we do together and for everything else that they do. I think even if there's nothing specific you want in that moment, just convening them and presenting your observations from the industry and problem that you're trying to solve and seeing if they're willing to contribute in any way is quite useful. Also, just openly presenting your pipeline of enterprises to see if they can come in together or individually to support them is really helpful. And I think as the ESO, you can really drive that group and keep asking them to come into meetings quarterly and really working to strengthen that relationship. So yeah, a quick action could be to hold a focus group with investors from your sector, present your enterprises and or an ecosystem issue and see the issue as collaborative for all of you to solve. And kind of one tip is that, if you have a more outgoing or enthusiastic funder or investor, it's very much a personality type. They might be particularly interested in playing a role in this convening and might even serve as a co-chair of whatever group that you create. So it is definitely useful if the more energetic of your investors can be called in to really play a role in creating that community too. And there's a big emphasis in our group in kind of decreasing risk. Our investors often invest together. They trust each other's opinions. And I think the conversations that we end up having in our focus groups or in our program design calls tend to be a really good, healthy debate where everybody learns. So yeah, those are my two tips. I think dream together to solve their problem and consider playing an active role in creating an investment community.
Awesome. Thanks so much, Nicola. I think I share what Chris mentioned around how insightful it is and how kind of innovative because of the niching and being able to focus on one thing really helped out in, I think, already honing in on what the approach was when it comes to building these relationships with investors. Maybe we can take Jonathan's question for now, but if anybody has other questions later on for Nicola and even for Bijon, you can put it on the chat. We have some time later, but I think Jonathan was just asking on, did the investors ever co-fund initiatives before the pilot with you? And then what were you hearing from them as you tried to bring them into the room together initially?
Sure. Yeah, they actually hadn't. So I think, and I think it all turned out to be kind of easier than we expected, and maybe even than they expected. So no, there was absolutely not the habit of investing together or running programs together. I think what existed was they had some sort of little Excel sheet of who they were working with, and they would compare that sometimes, but there was no co-investment. So I think, what we're hearing from them as we tried to bring them into the room together is actually, it was a bit about the struggle, I suppose. I don't know if our investors were unique in terms of really trying to find good pipeline and trying to find ambitious WASH enterprises and wanting to compare data with each other. You know, we actually felt a real hunger from them to learn from each other and to not be just struggling alone with all of these independent WASH enterprises that they were working with. So yeah, I think we had a really good problem point to dig into. And it really ended up creating a community for learning and de-risking and shared investment. So yeah, but no, I think they really welcomed the thought of, okay, not needing to fund something huge by themselves, but being able to co-invest together. And yeah, in terms of knowing the WASH investors before to Chris's community, yeah, that might also be a bit of a uniqueness to us in that we are WASH professionals trying to make our way in an ESO world, rather than vice versa. I think there's pros and cons to both ways of working. But yeah, I think having at least one deep thematic professional on your team who, you know, is from a certain sector so that they can bring their network could be very helpful. So yeah, if you're doing such a thing in agriculture, health, or whatever, you know, having someone deeply from that with a working history and all of those connections could work very well. So yeah, we did know some of these investors before.
Okay, awesome. We'll stop there for now. We have a Q&A later on, but thank you, Nicola, so far for all your sharing. We'll move to Paul Belknap's sharing. So it's through a video that we will be sharing. Paul is from the Miller Center, so they're also a member of Pollinate Impact, and he shared his tips through a call that I had with him a few weeks back. So Tess, if you can please bring up our video.
Introducing himself in a bit. So Paul. All right. All right. So we have Paul Belknap here with us, and he'll be introducing himself in a bit. So Paul, if you could just introduce your name, organization, what do you do, where you're from, and then our fun question for today is, what relationship outside of work do you invest in and has like a good return for you? So please go ahead.
Okay. Thanks, Rod. Great to be here today. And yeah, so Paul Belknap, Director of Impact Investing at Miller Center for Global Impact. We're based in California, do work across the Global South. And so, yeah, it's a great question in terms of relationships that I maintain. I guess probably the one I invest the most in is the one with my parents, like, which is a pretty important one. Return maybe is the wrong word, but it's I think it's a valuable relationship to like make sure that you're taking advantage of the time you have with your folks, and so yeah, it's always a good one. So.
Awesome. Thanks, Paul. I think, yeah, definitely agree, especially, having parents live a long life and be with you is such a privilege. So investing in that is definitely something great. All right, so let's get into it. So Paul is here with us through this recording to help us get some insights on building and sustaining investor relationships as an incubator. And our first question, Paul, is what's one kind of key principle or practice that's helped you and your team build meaningful relationships with investors over the years?
Yeah, I think I try to put myself in their shoes is maybe the most valuable thing to do, and think about the fact that they probably are talking with other incubators or accelerators, and how and they get all kinds of requests for their time from lots of different people, not just those two groups, right? And so how can you be kind of the most relevant, the one that like makes their job easier, and like centering that principle, I think has been really helpful for me in you know, and kind of building those relationships effectively. And you know, and I think in my MBA program, we always talked about what's in it for me, and like putting yourself in the other person's shoes. And so that's how I've kind of approached that.
Awesome. So it's really about making the most out of, you know, the time, the energy that the investor invests as well to you, and making sure they sounds kind of utilitarian, but you know, they have to get something out of the relationship, understandably, because it's their job also to make sure that whatever they invest in is worth it, right?
Yeah, and you know, I think, and so it's thinking about it, you know, so most of the time we're having these conversations with investors because we're, you know, we're trying to give them pipeline, we're trying to get our company's investment, right? And so that's the ultimate goal for most of them, to engage with incubators and accelerators. And so making sure that we are giving them relevant leads, that we're doing so better than them, you know, meeting people at conferences or at pitch events or different things. You know, maybe they do a pitch event with us, but making sure that our companies that we're bringing to them are really fitting their mandate, I think is really important. And so showing that you are learning and like taking their feedback on board, I think really helps to establish what I was talking about, where it's like, if you kind of keep bringing somebody the same kind of companies that they're saying no to for the same reasons, that starts to show that you're not understanding where their head is at, and where, you know, their investment criteria or things like that. And so if you're able to kind of maybe even mention like, hey, we have these other 5 companies that are kind of similar to something I showed you before, and so I'm not going to talk about them today. They're going through the program, but here are 2 that I think are really different because of X, Y, and Z, and you know, reasons you mentioned last time, like shows that you're picking up on what, you know, their criteria, the things that they value. I think is really, really critical. So.
Right. No, that's really good. Like keeping your finger on the pulse, basically, with your investors, right? And like picking up on even the smallest details, so that they kind of appreciate that you, as an incubator, are listening to whatever it is they're telling you, and that you're really there not to waste their time, but to give them something that's also valuable for them. You mentioned something about the mandates, right? And this is something that has been kind of a challenge for a lot of our incubators in the network, to have sort of a gauge of what the mandates of these investors look like, or even who are they trying to invest in. Do you have any advice there, or thoughts on, you know, how do you understand what an investment ready enterprise looks like, so that when you present it, they'll actually be interested in investing in it?
Yeah, I think it, you know, basically it's spending time with them, understanding. So one way that I think is, you know, pretty easy to do is looking at, you know, almost everyone has their portfolio on their website, every investor. And so looking through their portfolio and understanding when they invested in these companies, and, you know, that might require going on something like Crunchbase or something like that, but like doing a bit of homework and understanding, okay, if I rewind 2 years ago when they invested in this company, you can probably kind of understand what it looked like at that point. Like you probably have the information to figure that out, and maybe you ask them some questions. I think increasingly, so doing some homework and understanding what are they investing in, no matter what their website says about their mandate. But like what are they investing in, particularly recently, because people, you know, do have their mandate change. And then also, I think as you bring them, I think one of the most effective things that I've seen is, beyond doing that homework, is you bring them opportunities from the incubator or accelerator, and then when they make sure that you're getting like tangible feedback about why no, right? Like that can be as valuable as them like investing in one of your companies. Obviously, that's a great thing to know, right? Like, okay, we know what this company looked like that we incubated, and then they invested. That's super helpful. But also getting the reasons for no and making sure that you're kind of, you know, logging them in some kind of systematic way, that helps you start to build the data set basically that you can look at and understand, like, okay, this is what's resonating for them, this is what's not resonating for them. Because I think that for most investors, particularly equity investors, debt investors, like our fund, can be a little bit more stringent about kind of financial criteria, for instance, just because of the nature of our investments. But like there is a lot of flexibility with a lot of us, and so you have to, you know, I think understanding the practical examples is the best way to do that. And then as you get those that like number of those built up, you start to understand what investment really looks like over time in very tangible terms. Some folks are really good at articulating, I need X, Y, Z, you know, kind of different things. But I think it's often that's the most practical way to do it.
Right. So it's really a learning process too, right? Like really being able to do both your homework, but also taking all the feedback that you can get from your investors in your network so far, and then matching that with whatever's in your portfolio that might actually interest them. So that's when you've already established a relationship. If we could take just a step back, Paul, if you're, for example, maybe an early stage incubator accelerator and you're getting your feet wet in, you know, trying to build your investor network, what would be a good approach or like first step to putting yourself out there for investors and making your organization known?
Yeah, I mean, I think it's events and things like that. You know, I think, you know, I think back to, you know, when I was doing a lot of this, you know, I think I've always worked at incubators and accelerators that also funded, which gave us some advantage, in that we had the skin in the game. But, you know, it's honestly just like you meet people that you see reasonable levels of alignment at a conference or, you know, networking event, and like follow up and say, hey, let's get coffee. Just want to run you through what we do, and, you know, kind of establish like, okay, this seems like there's alignment, but is there, like, are we on the same page? You know, how far is you know, how big of a gap maybe is there between the stage of businesses we typically work with and the stage you like to invest? You know, is this likely to go anywhere? And so, yeah, I think it's really just, you know, kind of being respectful of people's time and understanding like, okay, like this one's a fit. This one maybe like, great, we had coffee, but like that's probably, you know, we'll keep in touch, but not likely to be anything there for a long time. And then just really focusing on with the folks that you are finding that kind of alignment with, just kind of being consistent and following up on a pretty regular cadence. But yeah, starting with, you know, typically from my experience, it's always been, you know, kind of conferences, various kind of other networking events and things like that are the biggest. You know, you can, the other, I think, really effective tactic here is, you know, if you have entrepreneurs that you've worked with maybe previously, and like seeing who's invested them since they came through your programs, is another, I think that's another tactic that I've used at times, is saying, hey, you know, we supported you 5 years ago or whatever it was, and you just raised investment from these people a year ago. We'd really like to talk with them and just understand if there's alignment. So getting introductions from entrepreneurs you previously supported is a really, you know, good way. I've also found that, you know, once you have your first like handful of investor relationships, they're often very happy to introduce you to their peers, especially, if you've built a good relationship with an investor and they're like, you should really talk to this other one because we often co-invest or something like that. And they might be interested in connecting with you because there are pieces of what they do that, don't, it's not like we always co-invest. And so maybe there are things that you'd want to work directly on. So those kind of introductions, apart from kind of more of the networking kind of events and things like that, I think are one of the other really effective tactics to kind of start and continue to build that network.
Oh, that's great, Paul. Yeah, so really putting yourself out there through these events is quite important so that you get to know these investors, they get to know you. At the same time, I think that's a really good tactic on your alumni as well, as a place for you to get referrals for investors. So that means also having a good kind of engagement with your alumni, right, for that to happen. And then once you have your small base, then these investors know other investors, so it makes it easier for you then to get introduced to others. So
exactly. Yeah.
Yeah. So now from starting to maintaining these relationships, how do you kind of maintain the trust and engagement with these investors over time, especially maybe right now where it's more of a dynamic or like uncertain context? Yeah.
Yeah. I think this part is really harder for some people than others. And that's like, don't fall in love with your companies. And so, I think I've seen that one of the, comes back to what we were just talking about kind of, in terms of being open to feedback from investors. And so, if you meet an investor and you're kind of like unwilling to receive their feedback about gaps that they see, or like stubborn about having kind of the positive spin about the companies, I think that erodes credibility. They want people that are, I think they want to be have relationships with incubators where they feel like they're getting a balanced assessment, and as soon as they kind of start peeling back the layers of the onion isn't rotten, right? Like inside, like the outside looks nice, but they want to know up front, like, I think they understand if you're working with early stage businesses, everything isn't going to be perfect. And for them to come up and for you to say, hey, like, we really think the product on this business is amazing. They're still kind of establishing product market fit. The team's great. The team is really strong in, the technical development, and initial sales, but they're going to need some work as they work on scaling up on the operational side, or their finance function isn't as strong right now. Like, if you can present them that balanced view of where the company is strong and where they have room to grow, that saves them time, but it also helps them understand that you're thinking, in more or less kind of similar framework that they are. And so I think just, it's like not having the rose-colored glasses on all the time and saying, oh, like, all my companies are perfect, and being able to, have an open and honest conversation about, because they value the fact that you spent a year working with this company or something like that. You know them well, and if you're able to leverage that and give them, be real with them about the company, I find that to be like very, very good at building trust, because they, and building, and that I think is even more important in a situation like we find ourselves right now. So,
thanks, Paul. I think that's great because I think it's kind of a counterintuitive thing. How at the start you'd think where if you present your portfolio in such good light that more people would be interested, right? But to maintain the trust, it has to be more of a fair assessment where you're looking at it with a critical eye too, so that they know you're not kind of BSing them with things that they will see through somehow. So to be more honest also is something that they appreciate.
Yeah, 100%. Yeah, I think it's they're going to find the flaws eventually, unless they're a really bad investor. which means they probably won't be around very long. But no, I mean, they're going to find the flaws. And so, you know, as long as you're kind of open and honest. And also, you know, I think often that can come with, you don't have to present the flaw as like an open problem. You can say, okay, like, here's how we're thinking about solving it, you know, with our knowledge of the business. So you can come to them with both a, hey, like, and you don't have to only be negative. You can talk about the positive things and the negative things, and, you know, but also present, say, hey, this is how we're thinking about solving this problem. What do you think? And I think the other tactic that we often used in some of my previous roles is we would actually talk to investors during the diligence process, because we were writing very small checks and we knew we weren't likely to grow much with the business. We wanted to know who was the next investor. And so we would reach out to investors, get their feedback during the diligence process. And then when you come back in a year or 6 months later and say, hey, you know, we talked about this company during our diligence. You identified XYZ. We fixed this thing. We haven't quite gotten there on this other thing that you talked about, but we're working on it. You know, the entrepreneur just needs more time. That really, I think that helps a ton, because you show you're listening. You also show that you've accomplished something with the business, and investors love to see, you know, trend lines, not one point in time. So when they hear from you about a business over time, that really helps.
Right, it's also keeping abreast with the development of.
Thank you. Thanks, Tess, for sharing. And thank you for Paul Belknap again for joining us through the recorded video. There are a lot of things that I learned from that call from Paul, and hopefully that has also helped you all gain some insight into how to kind of build, especially if you're an early stage incubator, accelerator, ESO, and also how to sustain it once you've got some contacts going, right? So there's Paul, and then now, last but not the least, we have Bijon join us and share his tips from his experience at LightCastle Partners. Bijon, anytime you're ready.
No, thank you, Ruth, for inviting me, and thanks to Nicola and Paul for sharing their experiences as well. I'm taking some ideas from them as well. I think one of the ideas Nicola mentioned around community development, we haven't really done that, and maybe something that we can think through as well. Of course, I think with investors, I mean, they're going to figure it out anyways, right? It's better to kind of not sugarcoat too much. I mean, we of course want to sell our cohorts, our entrepreneurs, but it's also important to say what the truth is. So I'm going to share, when we started back 10 years back to launch our first fund, it took 7 years. The second fund, it took 3 more years. So right now we have 2 funds. But our plan is to manage $100 million, right? We are only around like 20. So again, maybe I will share my experiences on how we got from there, like from starting as an accelerator incubator, investment advisor, how we launched our first fund, and then of course how we did launch the second fund. This is all practical experiences that I kind of followed. So I'm gonna walk you through it. And again, feel free to stop me anytime if you have any questions. You can use the chat window, and I'll try to share the best that I can, right? Okay. Okay, is my screen visible, right?
All good? Yes.
Perfect. I think it's coming, right? Okay. Yeah. All right. Yeah. So I'll start with kind of something I call the strong ending process or demo day, and then I'll share the gameplays that we have done over the years that has helped us where we are, and then I'll try to sum everything up, right? So often I think I'm not sure if all of you do it, but usually when we ran a lot of accelerators and incubators, we used to do something called a demo day at the end of the program, where we presented our cohorts. We invited different investors to come, and we kind of presented our cohort in subsequent pitches, right? I think what we forget is that the demo day is actually the beginning. It's not the end of the program, because often we say, okay, the accelerator program, we have done demo day, we have ended it, right? That's actually not it. I mean, Demo is possibly the first time the investors are seriously taking or having interaction with the entrepreneurs in your cohort. And that's just the beginning of the relationship. And you have to nurture that for like 6, 12, whatever, 12 months to kind of just get a deal to close. So I think often we kind of think that is the end of the program, and it's definitely not, right? All right. And even before we do any of these gameplays, one thing very important to understand is we have to have data in the market, right? If we do not track who are the investors, where they have invested, what is the ticket sizes look like, what are the type of companies that they're in, what those founders say about those investors. If we do not collect this data, none of these gameplays are going to work, right? That I'm going to share. So data has to be collected, and it's not that data cannot be collected. With today's world of talking with founders, with informations like Carta, with informations like Crunchbase, with informations like PitchBook, data is more available than you think, right? So collect all the data that you need even before executing any of these gameplays, right? Gameplay one, this is where we first started. I mean, almost 10 years back. I mean, institutional investors are more stringent. They have more mandates, more structures they can relate to. So we started the investment with angel syndicates and co-financing, right? So what it means is that instead of one person funding the company, we would get together a group of people and we form an angel syndicate and then co-financing. You might ask where we got a lot of these angels. We just went and took the handbook of the different Chamber of Commerces, which had a list of different companies, representatives like managing directors, CEOs, board members, and we kind of reached out to them, say, hey, would you be interested, right? That's how we kind of started building kind of like an angel syndicate. And there we stress that this has to be co-financed, right? So 3, 4 angels coming together to kind of, again, come into that particular company. And again, there are different structures here, like things like roll-up vehicles, where you bring in multiple angels under one special purpose vehicle to it, so you don't like your cap table doesn't look too messy. But in general, I mean, angel syndicate where we kind of started, doing this. When we did that, we knew we were actively tracking all the investors on the market, because say Angel 1 is investing now, right? So one of the companies, for example, we invested early one was an education tech company called 10 Minute School, right? Now, when we did invest or got angels to invest there in a syndicate, we knew that in 2.5 years time, they're going to require an institutional round of investments. So once that angel investment happened, we also were tracking investors who are investing in the education technology space and possibly will spend come in as a letter. Will be the company that angel syndicate has received. They will become eligible for institutional investing maybe in a couple of years once they reach certain milestones and targets. But we are tracking them from kind of day one. I'll show you a few examples how we track investors at the end of the presentation, so that we can, and I'll be happy to share those tools with you as well. This is very important. Oftentimes we think investors are just financial institutions like venture capital companies or angels, but there is a big market with corporate strategic investors as well, right? So a lot of the times corporates who are looking to innovate or looking to enter or expand their operations, they're looking for companies that match their strategy. And you can actually get corporate strategic investors as well. Some of the deals, for example, we have cracked corporate strategic investors in even e-groceries market. So there's a large company who was doing a lot of convenience store products, and for them, quick commerce e-groceries was a natural extension. So we reached out to them and I said, hey, they're really good matchmaking. Instead of you building out your own front end, why don't you just invest in one, right? So corporate strategic investors is something to think about as well. This is quite important. Think of it like a buffet dinner, right? There are different kind of investors who like different kind of instruments, right? Now, if you only go and say, okay, here's equity, right? I mean, the investors, yeah, good, but I don't want to get into a business with common stock, and then I'm stuck there for 5, 6 years. I don't know if I'm going to get an exit unless there is an IPO in capital markets. Secondary sales are hard. It's tough, right? So you have to design instruments that matches, of course, the enterprise or the entrepreneur you're working with, but also is interesting for the investor. we did a lot of interesting instruments. One of them was called SEF, Simple Agreement for Future Equity, where an investor would invest, but the money, they will not receive a common stock. They will get valuation maybe 2 years down the line, where the company have raised their next round of financing and they get a discount on that valuation. And again, if they do not want to stay with the company, they can also exit by converting that instrument into a convertible into debt, right? So the instrument can convert into both debt or equity, depending on what the investor and the entrepreneur wants after a certain period of time, right? So there are a variety of quasi-equity convertible instruments, that we have designed. We have done very interesting instruments under this program called Biniyog Bridhi, which is called impact credit. So just like if you offset carbon, you can claim carbon credit if there's kind of like verified and everything, you're developing carbon project. We design instruments that if you're an entrepreneur who has an impact enterprise and you generate impact, you can convert them into impact credit. And impact investors can actually purchase those credits. So you actually pay back investors in terms of impact credit, as opposed to paying back in money. So you can design a lot of these instruments, and we have designed a lot over the last 3-4 years, especially on tapping into a lot of different kind of investors. There are impact only investors, there are impact first investors, and there are investors who take impact as a lens, and there's a commercial investors. And each of them has different requirements, and you can design different instruments for each of them, so that it's like a buffet table, right? You can match obviously investors depending to your capital needs and everything. People often ask me that, how do you know who has money? I say it's not that difficult. Just go to a financial institution, right? Figure out who frequents the high net worth financial institutions clubs. That's it. I mean, people who have the largest bank balances are the one you target. I mean, it's easier than we think, right? This has been one of our killer strategies, right? When we early started, we figured out, okay, who has money? How can we get in touch with them, right? So we did something called a wealth management forum. We said, okay, we will, we'll teach people how to manage their wealth, right? And our hypothesis, people who has a lot of wealth, of course, they will invest in fixed income securities, they'll invest in real estate, they'll invest in fixed assets, they'll invest in, the capital markets, public capital markets. But a percentage of that would also go into private capital markets and startups and impact enterprises and whatnot, right? And we did that, and we charged people for it, because I didn't want it to be free. Like, I wanted to be, and we had a collaboration with a large multinational bank who had a lot of these high net worth individuals as clients, and we got them into this wealth management program. So people are paying us, and we had a whole day. We did that whole forum and everything, and then we had a database of people we could get in touch with, right? Not just like a blank face, right? And then we followed this up with Alternative Investments Forum. Nowadays, we do a lot of these investment summits, right? This year, we did one early in February. We're possibly going to do one in October, right? The point is, get high net worth individuals in the room, right? And people like to come to these events, right? They come, they network, right? They get structured, they meet like-minded people, and you get to interact and build relationships with them as well. This is very important. You have to deeply understand the regulatory incentives, right? Is there any particular tax incentive by investing in your cohort in particular structures and everything? So if, for example, in Bangladesh, where we did a lot of investments in agriculture, we figured out banks need to invest 2.5% of their portfolio in agriculture by regulation. And then there are different kind of tax incentives in different geographies that gives you incentives or tax breaks for investing in early stage companies or in certain sectors, right? So if you deeply understand these regulatory incentives, you can use that to your advantage and reach out to investors as well by simply saying, look, if you invest, you get a tax break. If you don't invest, you just have to pay taxes. So why don't you use this to take a more higher risk, right? So you can structure, if you can structure it in such a way in the markets that you operate, regulatory incentives can be to your advantage. This is gameplay. I have like 3 more gameplays. At the end of the day, I mean, nowadays, I think fundraising for a cohort becomes very easy because we have funds ourselves, right? Instead of just going in and saying invest, we simply go and say, hey, look, I'm putting in $100,000. It's a $1 million round. Do you want to put in, say, $250,000, right? One will put 250. I go to the next, say, hey, together we are putting 350. Can you write a check for $500,000? Okay, all right, 1 million, you guys are investing. Okay, we like your due diligence. Let's go ahead. Well, the journey wasn't easy. I think one of the first LPs that we kind of convinced was, DFIs, where we got them to come and invest and run funds with us, and we built kind of like the expertise. And then when they trusted us, okay, no, these guys have generated invested in quality companies, have helped us generate sustainable, use cases, companies that are growing. Let's give them more money, right? So you have to build relationships with the LPs over time. What they see, they will first give you a small amount of money, which you invest, you can manage, and you can grow. And those use cases will help you raise more funds, right? But at the end of the day, once you start doing fund management, it gets a lot easier because then people take advantage of your due diligence, so their due diligence costs go down. And if you're putting your money, they know that you have a skin in the game, so they trust you more, right? So it's a big difference between saying, this is a fantastic code, you should invest, and saying, this is a fantastic business, I'm investing $100,000, join me. So there's a big difference in the two, and the second one is a lot more easier. But again, as I said, it took us even 7 years to launch the first fund, so it's not an easy as it sounds. Yeah. This is very important. Throughout your cohort, what really helped us create superstar examples. So we had this business early on, we invested, and it was quite hard because we were as a company, we were young then. We somehow got all our capital in and we invested from our balance sheet. Okay, let's invest. I mean, we have been telling investors to invest. We really believe in this idea, we will invest ourselves. Now that business started reaching customers and suddenly had 15 million users. I mean, active users, monthly active users. We're like, and that superstar example kind of helped us kind of create a lot more. Sorry, I'm getting a call, but I'll go back. Sorry about that. My laptop is connected to my WhatsApp, and then I start getting calls. Okay, is my screen visible now?
Yes.
Okay, perfect. Sorry about that. So yeah, so creating a superstar example is important, right? Because that one simple example that we created early on has even helps us now, right? Okay, oh, you guys are the ones who, had this company who later on raised capital from, like, say, Sequoia. They literally raised money from Sequoia 2-3 years back, right? So creating that superstar example, something that, puts you on the map is quite important. And if you have multiple, that's fantastic, right? This is my last slide. We know we give a lot of effort to managing the startups, but we have to manage the investors as much as startups. So for example, previously we were managing investors for demo days. Now we manage LPs who invest in our funds. But at the end of the day, same thing, right? We're managing investors. And you have to manage them as much as startups, right? And I think one of the things that has really helped us is creating FOMO. That, if you don't do it, and I don't want to do it like 2 weeks, I just go and say, hey, I have this fantastic opportunity. This is the round, this is how long it's going to be open. Yeah, I mean, if you want, you can invest. If not, we're just closing the round in like a couple of weeks. I create a bit of FOMO, right? If they come in, and it's fine. You don't really push too much. You cannot really push the foot too much, right? You have to have a balancing act here, right? Yeah, summing up, the demo that you do is the beginning, not the end. So there is a lot of hard work the next 6 to 12 months in getting deals happen. You have to have data at the first go, otherwise this is not going to work. You have to manage your invest. If co-financing always the easiest, saying that one investor is already in, you can just get the next one. And at the end of the day, you have to create track records and strong PR, whether it's through superstar examples, showing your capabilities and everything. So yeah, so that is some practical experience that I wanted to share. Again, thank you, Ruud, for having me, and happy to answer any questions and everything that you have. Yeah.
Thanks, Bijon. No, this is really interesting. I had the opportunity and privilege to meet Bijon during a conference earlier this year, and we learned about what he mentioned. Bijon Islam is an initiative that they started with other partners in Bangladesh to help create this system where all of the impact enablers are involved, investors, funders, the entrepreneurs in the middle, and then as well as incubators and accelerators. So it was an interesting model that I think could be replicated in other parts of the global south. And I think hearing from Bijon and his experience, it took a lot of years to actually get to where they are now. And hopefully we can learn from this, and maybe once Bijon is part of the network, well, he is as a member or a partner, then we can definitely learn more about the process that they went through to get this initiative going. But for now, the floor is open for any questions for Bijon. You can either type it out on the chat, or you can also raise your hand and unmute.
I went too fast. I have the habit of speaking quickly. I'm trying to change that, but that hasn't changed much, and unfortunately, in the last 10 years or so.
There we go. Ida says, any thoughts on the usefulness of reverse demo days versus the usual demo day?
Sure. Could you explain what a reverse demo day is? Then possibly I can. Yeah.
Yeah. Hi, Bijon. Hi, Harriet. Thanks for the session. So I'm from Vilgro, Africa, and we have a program called the Health Tech Hub Africa, where we do reverse demo days, which means that the investors pitch to the startups rather than the startups pitching to investors. And we've been doing this just to help the startups get a sense of who the investors are in the ecosystem and understand what the expectations are, even as they plan to start their fundraising journeys. So I'm just wondering if you've had any experience observing such or hearing about them, or if you haven't, what thoughts you have regarding investors telling startups about themselves versus startups telling investors about their businesses. Yeah.
Thank you, Ira. I think that's a very interesting question. That gives me an idea. So we have never done this reverse demo day, so it's the first time we're hearing of this. But I mean, it's good. Maybe we will try this in our program. What we effectively do is we maintain something called investor comps. So this is, I'm going to share my screen and again show you like a bit of an example what an investor comp kind of looks like, so that you have some idea. Let me see if I can pull this down a bit. Yeah, I think so. So this is what kind of we have. So we invest a lot of time with investors. We have dinners with them. We talk with them. They actually they actually read a lot of our reports as well. We have this quarterly startup roundup reports that they go through, right? And then we kind of have details on what each of these enterprises kind of do, like including what they're doing, what kind of investment instruments, what is the ticket size, what are the kind of companies they've invested, everything, right? We share this with the startups, right, as part of their learning journey, right? And and then so we said it's not a blind testing, right? That these are the 5 investors you want to hit. These are the 6 people you want to talk to. These are kind of like what their expertise is, their interest is, and you reach out to them, right? But we haven't done a reverse demo day. Thank you for that idea, Ira. Maybe I'll try that sometime and give you feedback. Yeah.
Thanks, Bijon. I just want to give space in case Nicola has any insights or comments on Ida's question. All right. If none, we can go to the next question. Ian said they did a slightly similar event on matching. Would you like to talk about it a bit, Ian, to the group? Oh,
yeah,
there we go.
definitely. It's
Yeah.
yeah. I think a lot of the work we do is demystifying investment for the founders, and that it's a relationship, an ongoing relationship. So don't sleep with someone on the first date. And the one way to demystify that is almost like a speed dating matching event. Obviously, this was done in Cambodia. There's not a large ecosystem there, and there's not a lot of capital either, but it just means what we're trying to do is teach founders how to build relationships and understand that there's many different ways to get capital and different types of capital and understanding who, how, why, and where and what. But it all comes down to alignment and the relationship and getting that feel.
Thanks, Ian. Any comments, Bijon, Nicola?
I think it's definitely interesting. I think for us, because of, again, personally from my background, which is more taking a deal and then kind of doing like a showcase and making that deal happen. So, but I think these are very interesting, learnings for me as well, right? We haven't really implemented things like speed dating or, reverse demo days, but, something to think about as we go through our future, right? For us, it's more like we open a round and then we reach out to investor network. We say, hey, we are putting 100,000. It's $1 million round. It's a fantastic deal. You should invest. So it's more like, because in my previous career, I was like a bond seller. So I used to sell bond where you close subscriptions. So we kind of use that similar methodology to kind of quickly, go ahead and close it down. But I do believe that the methodology that you guys are also using in the community building is definitely something that has a lot of merit. Yeah.
Awesome. Thank you. Last call. Any last questions from the participants, comments, insights that they want to share? Going once, going twice. All right, great. So I know we had a full mural board on our hands earlier, but I think we can focus on this last part here just to harvest any insights and also shared resources. So we did get something, for example, from what Ian and Ida already mentioned. I'm linking the mural board again, just for those who haven't. So the first question is really around, do you have any tools, templates, or practices that have helped you build or sustain investor or funder relations? So things such as a reverse demo day or speed dating slash matching. Um, if you want to share it and then you want to include your name and organization, we've of course credit you when we put it in our tool library for the network. You can also share it in the comments if again the mural is not working for you. So please go ahead and use that. And maybe after you've shared those resources, reflecting on what we've learned from the session, maybe what's one small step that you can take this month to improve your investor relationship? I know it's 2 weeks left, but there could be something that sparked an idea from what the speakers have mentioned. So this might be a good time to just put it on paper. Yeah. So please go ahead. Again, if the mural is not accessible, feel free to use the chat. Maybe we'll give another 3 minutes for people to input their answers. Again, feel free to use the chat if the mural board is not working for you. But I just wanted to flash the questions so that you can also see it. Just reading some of the answers. Looks like Pradnia put that they have a well-articulated deck showcasing the work that Unlimited India does. That's great. I see IDA's engaging investors with a value addition for all parties. Hopefully a good resource, niche and focused approach to relationships. Tips from Opera were quite helpful. Then for the small steps, I see give regular updates or poke them. I'm guessing the person who said poke is a millennial. I don't know if this is still a thing. I remember when Facebook used to be like the land of pokes. Um, reflect the plan that we have been following up until now. Having one champion investor to motivate peers in the group. A good follow-up step. Better tracking through a tool to share with startups and help us when setting up demo. Great. Thank you. Okay. Well, thank you everyone for sharing. If you're still on the mural board, please continue if you want to share your own insights there and any tools and resources again that you have, whether that's a link to a book or something that you've learned in the past that has helped you build or sustain investor relationships. That would be great to kind of share, cross-pollinate with everybody in the room, and then also seeing the kinds of actions that you're taking after this call. Definitely very helpful. We will be sending this mural link to everybody after the call so that if you want to take a stab at the activity in the middle around the cases. This is something that we didn't get to do in because of the time. But if you want to work on this, oh, I see some people have already put their answers. That's great. But we will send you this so that you can add more answers. You can try to um, answer anything that you haven't from any of the prompts that we have. So, but we'd really like to thank our speakers again. Bijon had to go ahead and already head out for another meeting, but Nicola's still here. Nicola, thank you so much for joining us today and for giving such wonderful tips. And of course, Paul Belknap from his recording. For now, if we'd be very grateful if you'd answer the feedback form that I have on the screen. It's a really quick one so that we can learn how to improve our virtual sessions as well. Awesome. While maybe people are working on the feedback form, Nicola, anything that you want to close us off with? Just want to give you an opportunity to uh, maybe say goodbye and everything if you want to.
Sure. Yeah. Thanks everybody for joining. I also learned a lot and continue to learn from Pollinate Impact. So thanks, Rod and team, for bringing us all together. I think the thing I always come away with these sessions is that like none of this is impossible at all, right? And it's about backing off every so often and having some good clarity of thought and making sure that a member of the team is responsible for maintaining investor relationships and treating them as clients and customers too. So yeah, I've come back with some lessons for our team also. So yeah, best of luck to everybody in cultivating better investor relationships.
Thank you. Thanks, Nicola. Definitely a lot of learnings today. I think having this breadth of kind of different approaches that you all brought as speakers with different experiences really was very helpful for all of us to learn how to strategize in cultivating better investor relationships. And hopefully we learn something and even like come away with maybe new people that we want to meet and network with, whether that's because we want to learn more about their uh, strategies and investor relationships, or we want to connect through other things like anime, right? So hopefully that this session has got you coming away with something valuable to you. So thank you again, everybody, for joining us today for this session. We hope to see you at the next one. And for those who are based in Southeast Asia, we hope we get to see you in Bangkok for the potluck in Southeast Asia. And we will update those in South Asia soon about the South Asian potluck as well later this year. But yeah, for everyone else, I'll see you in the next virtual call. And thank you again for joining us. Bye. Have a great day. Thank you.